Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back.
John, Nevada Exploration reported final results for its drilling program at South Grass Valley. Is the gold in groundwater story dead?
The market sure is treating the stock as if it's dead. The final results for all the RC drilling they did at South Grass Valley earlier this year was reported last week. No surprise, in the end of April update, it was pretty clear that in the areas where they would have hoped to hit something, the RC rig couldn't get deep enough, and we'd already learned that the most important thing they learned from this program was that the fluid flow was from east to west, and that if you go farther west, it starts to fade out. So the vectoring that they hoped to accomplish last year is finally happening, meaning they need to head east towards what is the East Golden Gorge target. And there's a bit of a problem with that because this is, in this area to the east of the Grass Valley stock, they've identified a particular unit which they call the CLM, and they give it this description: Cambrian-aged limy mudstone containing sedimentary debris flows and turbidite breccia units as what they think is the ideal host. And it sits beneath something they've given the CCS name, which is a less permeable and less chemically reactive laminar shale and calcareous siltstone unit. In other words, it's a type of cap rock. And now the theory is that this new Water Canyon structural corridor that they see in the eastern part of this basin, this is the high-angle fault that brought up all the fluids that altered all these lower plate rocks and made them anomalous with Carlin pathfinders and gold, never above 50 ppb, which is a little bit better than background, but certainly nowhere near signaling a discovery. They now feel they need to drill in this area to the east of the Grass Valley stock, down between 600 and 1,000 meters. It's a little shallower closer to the Grass Valley stock, which is a granite intrusion that came up through the original layer cake. And the hope is that when the fluid's channeled up there, it'll be more busted up, and they'll have found a place where the gold will drop out. But these are going to be 1,000-meter holes. We're talking a $5 million to $10 million program to properly assess this. So the market's a bit bummed out and did not react positively to this news that after spending $4 or $5 million on South Grass Valley, we basically have a deep target with still no evidence that the gold piled up in any ore grade concentrations anywhere. But in terms of context, this is the sort of thing that is of great interest to a big deep-pocketed producer such as Barrick. So in my view, given that it would take $5 to $10 million to properly test this, and the stock sitting at 14, 15 cents, rather than try and dilute themselves to drill those holes, they're probably better to try and get a half-decent deal with the likes of Barrick. So I think South Grass Valley for now is stalled. But this week, they finally announced something that gives them a break. The original focus for the company in northern Nevada had been the Kelley Creek Basin project, which consisted of the checkerboard option from the Genesis Group to the north, and the Hot Pot property option or leased from a private group that's to the south. And that's where they originally did a lot of the geoprobe groundwater work. And in 2016-17, they went in there with their new Scorpion rig, which was sort of a retrofitted RC rig, which would allow them to collect water samples in 3 dimensions in the gravels. Plus, if the bedrock was shallow enough, they could actually get 5-10 meters into it and get a bedrock sample, and thus do a bedrock sample, bedrock mapping with this rig, which is important because it's all blind. It's all under, average 100 meters of gravel cover. And they dressed this all up, put out a great technical presentation at the beginning of 2018, and then they marched off to South Grass Valley, and we haven't heard a thing about the Kelley Creek project. But this week they announced a deal where a private company called Austin Gold Corp, of which Joe Ovsenik is the CEO, is going to option up to 70% of this project. And they can earn 51% by spending $5 million over 4 years, and they're committed to spend $1 million over the next 15 months. But once they're at 51%, they can elect to go to 70% by delivering a pre-feasibility study by 2028. And $5 million is not a lot in northern Nevada where you're doing blind exploration drilling, but going to pre-feasibility study, that's quite a bit. So for now, Nevada Exploration Inc. has a free ride on a project, which at worst case they net 30%. Joe Ovsenik, he was partners with Bob Quartermain and Ken McNaughton in the original Silver Standard days, and then he went over to Pretium Resources when the Bruce Jack project was spun out, and he retired in April. He's got another shell company going called Central Timmins Exploration Corp. Not sure what they're going to do with this, but this one is a U.S. entity. Dennis and Darcy Higgs, who are also principals of Nevada Exploration Inc., are involved with this thing. The goal with this entity is to take it public in the United States, bypass Canada completely. And so it's now just entering the fundraising cycle to pay for all this. And Joe Ovsenik has, great track record, knows how to assemble competent team. They've looked at all the data that Nevada Exploration Inc. assembled, and they like what they see there. All that work showed that there's a series of linear structures in an area where there is gold in groundwater, and in fact the bedrock, which they have yet to accomplish at South Grass Valley, in places has 100 ppb gold, which is still not ore grade, but it's not that far off from what SSR is mining about 15 kilometers to the south, 10 to 15 kilometers to the southwest at the Marigold project, which is an 8 million ton upper plate hosted deposit of 0.4 to 0.5 grams. And the target here is not a Marigold system, which is created by a series of small fractures within the upper plate rocks which the gold diffused through. Because in this area where the Kelley Creek project is, it sort of overlaps this creek that goes right through the basin. It meanders all over the place, and it's dry most of the year, but it is a wetlands area, so you're not going to ever develop a giant open pit operation such as Marigold to the west. What you're really looking for is something like the Lone Tree deposit, which was a 60-meter wide, structurally controlled near vertical deposit that had a relatively small footprint for an open pit. It was about 4.5 to 5 million ounces of 2.7 grams, and I run an outcome visualization for that, which suggests that today, if you found something like that, it would end up being worth $1.3 billion Canadian, which for NGE's 30% share, that would be a $3 prize. But what makes Austin Gold Corp's option of this project very timely right now is a very interesting development to the west on the land controlled by SSR Mining. When they picked up the Marigold project, it was known to be this low-grade thing. It was going to be, bulk tonnage, hope that the gold price goes up. But SSR hoped that they might succeed where Goldcorp had failed, which is if you drill deep enough, you'll find the lower plate rocks with the feeder zone where high-grade sulfides piled up, and you get what you have up in at Turquoise Ridge at the northern end of the Kelley Creek Basin, or even in the Carlin Trend with places like Gold Strike. But all their efforts had failed. They would go through and there'd be like nothing but barren rocks underneath it. And they got some structural geologists in there a year or so ago to look at all this, and they said, well, the reason you can't find anything underneath Marigold is that it's been detached from its roots by some sort of thrust fault, which appears to be from the south. In other words, whatever fed Marigold is to the south. And that last year led to the purchase of the Trenton Canyon project between Marigold and Newmont's Phoenix mine at the southern end of this this small range that outcrops in that area. And they paid $22 million for that. And at the northern end, there's these old historic pits where somebody pecked away at it. And they're going in there to see if they can find more oxide resource for the whole Marigold operation. But they also went in there to see if they can find the deeper Comus Formation hosted high-grade gold mineralization. And on May 14th, they put out a news release that I think the market pretty much missed, but it is a very important development. They reported intersecting 7.6 meters of 44-gram gold. That's much higher than anything that's ever been seen in the Marigold area, and it's within a 95-meter interval of 5-gram gold, and it is in what they call a carbonaceous mudstone located immediately beneath Valmy Formation quartzite. And Valmy Formation quartzite is upper plate rocks. It's not a particularly great sponge for absorbing gold, but if you've got the fractures in it, the gold will pile up in the fractures. So this is a big deal. They also mentioned that they drilled one core hole, and it encountered the Comus Formation at 300-meter depth. And Comus Formation is the super receptive host rock in the Turquoise Ridge and Twin Creek area, where there's like 20 million plus ounces at the northern end of this Kelley Creek Basin. And everybody's always looking for this. It still needs to be pumped by the Carlin fluids to create any gold. You can have lots of barren Comus Formation all over the place. But the fact that they're finding this now in the Trenton Canyon area is perhaps the beginning of a very significant high-grade gold discovery for SSR within their whole Marigold Trenton Canyon footprint, which is sort of a low-grade bulk tonnage rock moving exercise. So this has to be watched very carefully, and it also has implications for the larger Kelley Creek Basin area and the project that Austin Gold just auctioned. Because if instead of getting a high-grade Lone Tree type discovery, they get a Marigold system where there's like 0.4, 0.5 gram per ton stuff all over the place, well, that technically is a bust. But if in this area, in the middle of the basin, the root has not been detached to some sort of thrust fault, but is actually there, then the next step is you start drilling some deep holes to see if you can find the Comus Formation underneath it within reasonable distance of surface. And that would, of course, be an underground mine. But if you're getting into 1 to 2 ounce per ton gold grades, well, then you would have something very substantial. Austin Gold went in there with this idea of finding this, 2 to 5 million ounce structurally controlled upper plate hosted Lone Tree type clone. But now with this news from SSR, this whole area is going to be looked at in terms of expectations for much bigger potential. The big potential has always been assumed to be way across at the northern end of Kelley Creek Basin, where Turquoise Ridge and Twin Creeks are part of what's called the Getchell trend. But now this area is opening up as potentially very interesting for those rich, high-grade sulfide Carlin-type deposits that this market really wants to see a discovery made of.
We'll have more with John Kaiser right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, what's happening at Wolfden's Pickett Mountain project this year?
Well, Jim, we last talked about Wolfden at the end of November, and it was kind of a disappointing year that they had. They had spent 2018 upgrading all the old historic holes and creating a 43-101 resource estimate. There were 2 lenses, east and west, which total about 4 million tons of zinc, lead, copper, silver, and gold mineralization. It currently has a rock value of $400 to $500 per ton, which is pretty impressive. It's massive sulfide mineralization, but that 4 million tons is just sort of below the threshold for a standalone operation. And so they were looking at, okay, we're going to have to just mine this ore and direct ship it to somebody and get a lousy price for it. And so what we really want to do is push the resource up into the 5 to 10 million ton range. And this possibility attracted Kinross last year when you and Downey and Ron Little went to Bay Street with what people perceived as a base metal play. They said, yeah, we'll finance you at a nickel. Go away when you're at a nickel and willing to super dilute. But Kinross, which had a very good experience with its Buckhorn mine in northeastern Washington, even though that was gold, and gold is sexy and base metals are not, it understands the high rock value concept. So it stepped up and gave them $2.5 million at the start of last year. And they went in there to test what was the footwall zone, which runs parallel to the west and east lens horizon, and they had nicked some good intersection as part of drilling off the west lens in 2018. But when they got in there, they had lots of problems with the drilling, and the holes that they did get through, it quickly became clear that this was not going to deliver a 2 million ton lens similar to the west lens. So that was in essence a bust. And they'd also done more of these airborne surveys and identified a bunch of conductors, and they'd done soil geochemical sampling. They'd also done some spotty gravity surveys, because they have this theory that the east and west lens are really in the southern limb of a fold structure that has been folded almost in upon itself, and the hinge axis has disappeared. So there's like to the northwest of this trend of near vertical lenses, there's like garbage rocks, which would have been the footwall of the seafloor beneath where the feeders came up and built these VMS piles. So they have this theory that there could be a parallel series of lenses in this northern limb, and they had one gravity target, which they drilled with the last hole in the season, and they managed to lose the hole. They had just a terrible year of losing holes, but the last 200 meters ran what was stringer mineralization, the kind you see in the feeder of one of these VMS systems. The high-grade massive sulfides show up where the feeder system spews into the seafloor environments and just builds up and then recirculates through, concentrates it. So they lost a hole short of the gravity target, and so this was kind of the teaser that we were left with at the end of last year. Not yet confirmation of the northern limb as a valid target, but evidence that it is promising. But they were also out of money, and so the question was, so we're stuck with a 7-cent stock. How are we going to raise another $2 to $3 million for another year of exploration drilling to follow up these other conductors that show up and continue to chase this PX1 target? And then they came up with the idea, let's sell the timber rights, because when they acquired this project, they acquired all the rights to it. And in mid-January, they struck a deal with an adjoining landowner who is in the timber logging business, Altius had some sort of claim on the timber rights, which it wanted in case Maine turned out to be flaky about its mining reform. But by then it had become clear that Maine has reformed itself. It's got its new rules for underground mining, and it wants to see underground mines developed. So Altius said, yeah, okay, you can sell that. So they managed to sell the timber rights to this adjoining landowner for $3 million US up front and another $1.5 million down the road. And this, without having to issue more stock and dilute itself, this has given them the $2 million US they need for their budget this year. And as part of creating multi-data set coverage of these targets, Ron Little has admitted that in the beginning they were in too much of a hurry to test targets and didn't collect all the different layers of data to prioritize them. One of the things that they had done was a gravity survey over much of the project. And in the area of the PX1 gravity target, it has enhanced that. In the conductors to the northeast, the gravity doesn't, make them much better. And gravity is important because massive sulfides are more dense than the surrounding rock. So when you get it at gravity high, the explanation is a denser rock type. And if it's a significant gravity high, it probably is massive sulfide. But much to their surprise, on the trend of the southern limb that hosts the west and east lens, about a kilometer to the southwest, they had tested an EM conductor, which they had hoped would be a massive sulfide. But when they drilled it and started getting close to the target, they were picking up graphitic sediments, and they said, oh no, the conductivity is from this graphite in the sediment. So they abandoned the hole so they wouldn't waste any more money. And yet when the gravity survey was done over that area, it showed two distinct gravity highs, roughly correlating with the general area of conductivity. And this was beyond the limit of the hole. So the footprint of this is capable of another 2 million ton westland. So this is a priority, going back in there as soon as they can to test this target, drill through the graphitic sediments and see if they have another west lens equivalent at 2 million tons to it, and that would get them over the hump. And with the other $2 million, they've got this strange D conductor which seems to veer off from where they believe the north limb to be, and they're not quite sure how that happened, but they have a gravity anomaly associated with that. So they'll be testing that, going back to the PX1 and drill the hole properly into it to see if they can get through the stringer zone and also confirm the whole north limb hypothesis. And then they have these targets to the northeast, several of them where no drilling has ever been done. They'll go in there and drill some holes in there. So this year, there's a lot potentially happening. And the other thing that they did is they decided it's time to apply for an industrial rezoning or rezoning to industrial use. Right now, it's just for logging use. And this is important because in order to apply for a mining permit, you first need to have an industrial use permit. So they've now filed all the paperwork to kick off the process for a 200-acre industrial use rezoning. And as part of that, they had to actually do a scoping study with what they had, and that would support a 1,000 ton per day operation, which is sort of the minimum for this. The 200-acre footprint that they've applied for is large enough that if they manage to have exploration success and boost this up to 10 million tons, they could go to a 2,000 ton per day operation within the framework of this rezoning. And because they've done most of this work, they're going to deliver a PEA by the end of this year. It's not going to be the sort of thing that has a billion dollar value, but it'll create kind of a baseline value for the worst case scenario. If all we have is this 4 to 5 million tons of $400 to $500 rock, and we can just barely create a 1,000 ton per day operation, what would it be worth? What is the cost structure? And that would make it attractive to a much different audience. So Wolfden is one of my bottom fish favorites. I downgraded them to bottom fish status last year when everything seemed to have gone wrong. Now I'm waiting for exploration success from this year's program, which seems to have a much better worked out set of targets to go after. They managed to solve their financing problems, so they've got plenty of money to even step up the activity if they start getting success. And I've also added this company. I bought a position in it last week after putting out a big update on Wolfden as a KRO favorite.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Kaiser. John, do you have any new exploration plays that have caught your attention that we should be watching out for?
Jim, last week I introduced a new bottom fish favorite called Pacific Empire Minerals Corp. This is a prospect generator company backed by Haywood's Dave Elliott and Rick Rule. And I normally don't like prospect generator farm out companies because if they get anything interesting, they farm it out to some other party, which then takes their time to do who knows what on the project. The company ends up with a 20-30% net interest, and the whole thing is like watching paint dry. But these guys, Brad Peters and Rory Ritchie, they took this thing public at 20 cents. In early 2018, the stock tanked immediately and has been under pressure ever since. They've done several financing, and Rick Rule used to insist on 5-year warrants. Now he only insists on 3-year warrants. So there's this huge overhang of about 20 million warrants, ranging from 10 cents to 30 cents that expire over the next few years. And the stock is, there's only about 45 million shares out, but fully diluted, it gets up there to 65 million shares. But what intrigues me is the prospect generation exploration strategy of this team. Their focus is blind porphyry copper, hopefully with gold deposits in British Columbia in these overburden covered areas. Now, British Columbia is, has some pretty good world-class deposits, but also has a lot of these 0.1% to 0.2% copper porphyries that nobody really wants to hear about. And all the ones that outcrop, they've all been explored. There is a new trend where people are rethinking some of them, like Red Chris, which in the upper parts are kind of boring 0.3% grades. But all of a sudden, when you get deeper into the root, you start finding elevated copper and gold grades. That makes them very interesting. And that's why the Australian miner Newcrest has bought part of the Red Chris deposit. They're experts at block caving. They're interested in these deposits, porphyry deposits that are not so laterally extensive, such as the Highwood, the Highland Valley copper system, but more these laterally constrained but vertically enriching at depth type deposits that lend themselves to block caving. Now, the strategy that the Pacific Empire pursues is it does all its general homework with regard to geological context in these overburden covered areas, and in the past people will have done some geochem, but a lot of times the overburden's too deep. The geochem doesn't mean anything. You can do geophysics and pick off magnetic targets. IP surveys are better for finding disseminated porphyry systems, but you can't do that on a large regional scale. You already need to have a focus. So there are these large parts of British Columbia that nobody knows what to do with. So they will go in there and stake this land, and they own their own drill. They've made it very cheap how to drill. They drill a maximum of 200-meter holes. They do this on a 200-meter grid. They are literally prospecting with a drill bit, and the key is they want to find areas where the overburden is relatively shallow. In the first year or so, they ran into a lot of problem trying to cope with the same reason so many other companies have given up in areas, is how deep is the overburden. And they've developed a way of using a seismometer where they can quite accurately assess the bedrock distance. And so now before they go and drill anything, they do these seismometer surveys and say, yeah, okay, everything is within reasonable reach of our RC rig. And these RC rigs, they don't like to go much beyond 50 meters. They run into all kinds of problems. So they look for settings where the overburden is 50 meters or less. And of course 50 meters is reasonable to strip away if you're going to have an open pit mine. And they've been doing this for several years. Now this year they are tackling 2 projects this summer. They just did a financing at I think it was 6 cents. Gave them enough money to go in there. Each program costs maximum of $200,000. It's typically a 20-hole program on this 200-meter grid. And the first project they're going to tackle this summer is the Weed On project. And this thing is located in a part of British Columbia, southeast of the Mount Milligan area. Kaminko and others had it. Teck ended up having it. They did geochem work and did show that there's something worth chasing here. But even though they had all these targets lined up in 2011, by then the market was starting to fall apart. They were uncertain about with how deep the overburden was going to be, and they decided, we're not going to bother, and they ended up letting it lapse. And the Pacific Empire team, they went and staked this, and they're going to go in there and drill this grid of holes in an area where there is an IP anomaly. So this is going to be a make or break. There's either something interesting there associated with that IP anomaly, or it's a bust. And that's the idea. You test it and move on. This is a step beyond the usual prospect generator model where all you do is collect geochemical and geophysical data and some mapping data, and then you farm the drilling out to others. They've developed a way of low-cost drilling to assess these blind targets. So this gives them fairly cheap access to a large potential of underexplored parts of British Columbia. Now, the other project they're going to tackle with a similar scale project is called Worldstock, and it's about 95 kilometers northwest of Kamloops. And Brad Peters has been watching this particular area for a very long time. It's in an area where there was some known gold activity, but some time ago, a group of prospectors, private prospectors, managed to find some outcropping copper mineralization, and rather than spend all that money on tedious geochem surveys and geophysical surveys, they went and drilled a cluster of holes which got 0.3 to 0.4% copper, but didn't put together any big zones, and was more skarn-like mineralization. So this thing ended up stalling. But Randy Rifle's company, Gunpoint, ended up with this. It had been, Gunpoint used to be Christopher James, or James Christopher Resource Corp, which became the shell for the spin-outs from Chesapeake for all the other stuff. And this project had been accumulated by Max Bakers and others in it. And Gunpoint sold it to another company called Julian Resources, which started doing a whole bunch of work on it. and then it got hit by the market, and then it got distracted, and then all of a sudden they had failed to file their assessment work and lost this property. And Brad Peters' team wasn't quite as quick with the online staking as another prospector, but they were far quicker than anybody else in getting to this person and doing a deal which is a deviation from the model, because they can earn 100% by paying $85,000 cash and issuing 600,000 shares over 4 years. But Brad Peters really liked this project because in 2009, BC Geoscience published a compilation of all the stream sediment data in this entire region, which includes the Highland Valley, the Brenda Mine, the Afton Mine. And it showed, in this case, it showed two circular anomalies for copper with a coincident gold anomalies. And there is no explanation in this area for this anomaly. These anomalies, similar scale and intensity anomalies, exist around Highland Valley, except without the gold, but with Brenda and Afton, where there is gold, similar scale anomalies. So they deviated from their model to make sure that they got hold of this prospect. And there's been work done on it, so it's not going to be the simple standard grid on the 200-meter, rigid squares. It's going to be more of a customized grid to fill in existing data and assess that this summer. But what really got me interested about this junior was last week I saw a news release which was an extreme violation of the prospect generator farm-out model. They agreed to option a property called Jean Marie for $650,000 cash, 1.5 million shares, and $2.7 million expenditure over 5 years. And this project, it's 50 kilometers west of Mount Milligan. It has 77 holes in it, most of them drilled in the early 70s by Cominco. It straddles a 12-kilometer fault called the Jean Marie Fault, and there are 3 zones where copper and gold mineralization has been identified. None of it was ever rich enough to get anybody's interest. Teck had owned it at one point, but let it drop, and a couple of former Teck employees ended up staking it. They've had it for, I think, the last 15 years ago. They had it temporarily farmed out to Lucas Lundin's New Strike Capital before it wandered off into Mexico and got into the projects there. So those guys got it back, and Brad Peters had to spend 6 months in painful negotiations with these guys to get this project. And there was one hole drilled in there which was a brecciated interval that ran pretty good copper. And his thinking is there is something deeper going on in this thing that is richer. The stuff at the surface is not what this is all about. And because they've got this whole contextualized geological rethink in mind, they are going to go in there and revisit this. It's an existing system. They're going to try to demonstrate that, especially at the northern end in the A-zone area, this has been inadequately assessed at depth, and even possibly in the southern area, that the Zone C, where it's kind of your typical boring BC 0.1, 0.2% copper mineralization. That's another area that they're going to look at. But this is going to be an expensive project. So I'm intrigued by this company. This summer they'll be doing the weed on and the world stock project with their traditional approach. If they should have any luck there, then maybe they can chew through some of those warrants that are in the overhang and get the $1 million they need for starting a program in the fall. And the fall is probably the earliest that they can get drill permits for this. So this company is a 1-2-3 punch type new discovery watch story, starting with the weed on and world stock, and ultimately culminating with the Jean Marie Copper Gold project, which is actually an advanced project.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.